everyone. So welcome to this session on crypto and CBDCs. We're going to be talking about primarily the regulation of crypto and CBDCs now and looking forward into the future. We've got a panel here, so I don't know if Mark, you want to start and introduce yourself?
Sure. Nice to see everybody today. I'm Mark Chorazak. I'm a partner in our New York office of Shearman and Sterling. My background's in banking regulation and financial services.
I'm Barney Reynolds, a partner in London. My background's in UK and EU financial regulation.
I'm Toby, Norfolk-Thompson, and I work within sort of institutional trading at Coinbase, sort of building out the structured trading. My background is derivative trading.
And I'm Wilf, Odgers. I'm an associate at Shearman and Sterling. So I guess the first point to discuss, the UK's approach to the regulation of crypto is fairly light touch at the moment, although obviously there are developments announced yesterday. Can you tell us, Barney, a bit more about how crypto assets are regulated in the UK currently?
Essentially, we don't have any special rules for crypto. So we map cryptocurrencies, crypto securities onto our existing categories, MiFID categories essentially, the same in Europe, and payment services. And the announcement yesterday from the Chancellor indicates they're wanting to do the same for stablecoins, so there'll be systemic stablecoin mapped into the payment system. So that's where we are, and that's fine because an awful lot of things like exchange tokens, cryptocurrencies, utility tokens are completely unregulated. And so it's quite a liberal regime for wholesale. Obviously retail is subject to prohibitions effectively on promotion and derivatives. But where we need to think about is whether actually there are benefits from regulation, in particular for regulatory capital, collateral, liquidity, all the bank treatments that would allow the market to take off and all the banks to be able to use this stuff, and also for retail, because if that would bring the liquidity. So which bits can be allowed to be sold to retail? That's the holy grail for a lot of the businesses here, I would imagine.
Thanks. And Mark, how does it sort of compare to how the US approaches crypto regulation?
I'd say similarly nascent in the sense that we don't have a super regulator or even a body of regulation that's solely devoted to crypto assets or digital assets. So we're still kind of very much in the early game. And we'll talk a little bit about President Biden's executive order, which lays somewhat of a framework. But I would just note perhaps the obvious that there's a panoply of regulations and statutes which obviously exist today that govern a broad range of financial activities. And so much of how regulators think of crypto assets and just generally crypto activities is through these existing regulatory lenses. And some of these statutes are, from the Great Depression, right? In the case of the Securities Act, the Exchange Act from the 1930s, and then you have a number of consumer protection statutes from the Civil Rights era. So there's old frameworks that are trying to be used for very new and novel uses.
Sure, and there are some jurisdictions where the regime is particularly developed. I think in Liechtenstein, for example. Do you think there's anything we can learn from how they approach it, or do you think the UK and the US should plough their own furrow, as it were?
In my view is not much really. I think these are sort of fig leaf regulatory sort of regimes for people to get up and running with something where they can say I'm regulated. I mean there are various of them around the world, but they're basically in offshore or ancillary places. ADGM has got an interesting one. It's obviously a common law based system, but the size of these markets is small. Singapore has a loophole in the system for crypto derivatives trading just because of how they transpose the UK regulatory regime. But it's a loophole and it's much, much narrower than they would have you believe. I don't think there's much to be learned from these. I think we need to think for ourselves and actually integrate it properly into the global financial markets, which is what's happening now.
And Toby, from a sort of industry perspective, what are you looking to see from how regulators develop their regimes going forward?
Yeah, well, I think there's a real opportunity for for a comprehensive framework and to really think about things deeply. There's a lot of focus on anti-money laundering, consumer protection, and more defensive regulation, which also more retail-minded. But actually, if we're going to start using stable coins, within the capital markets for margining, collateral, liquidity buffers, so on and so forth, then RWA, Solvency II rules, consistent capital balance sheet rules, need to be thought about deeply. And there's the UK is in an unprecedented position in terms of the UK and the US, an unprecedented position of so many other jurisdictions following what they see, that there's a very good opportunity there. And obviously everything we've heard in the last 48 hours is very promising. I think also broadly, more broadly, the nature of digital autonomous organizations as a new type of corporate entity, how they are thought about and regulated is another enormous opportunity. There are a number of, Switzerland, Singapore in particular, a number of other countries that are starting to approach that, but that's sort of an embryonic stage. There's that's the sort of the fundamental stuff, and then there's the more tidying up stuff, the various sort of accounting and tax rules, which through no fault of their own are not. There are obviously some inconsistencies at the moment across different kind of capital market products, and at the coalface you start to see these things. There's a good opportunity for all that to be tidied up as well, I think.
Absolutely. And Mark, you mentioned Biden's sort of recent announcements. I mean, can you give us a bit more colour on what they involve, and do you think they are good developments, or do you think there's more to be done?
Sure. Well, in early March, sometime after the invasion of Ukraine and before Will Smith punching Chris Rock at the Academy Awards, President Biden issued an executive order. It didn't get as much attention, I think, as it should have. Certainly in the crypto world, it's received a lot of attention, but I think it's very notable in the sense that it's laid out a rough framework for how this administration is going to view crypto. And one of the central takeaways is that it's not shutting it down, right? It's very clear from the tenor and the substance of the executive order that the Biden administration and the whole, whole of government approach that the executive order offers suggests that there really is a role for crypto. There's a role for central bank digital currencies. And just a couple of I think our own observations of the report is that some of the main themes that you mentioned, consumer protection, even national competitiveness, mitigating illicit finance. These are all themes in the executive order. Now, the executive order doesn't itself produce or create any kind of federal regulatory framework yet. It largely just orders a bunch of agencies to issue reports and to study. But it's notable that it's not simply just studying the pros and cons of crypto or CBDCs. One of the aspects of the CBDC part of the executive order in particular, which was quite interesting, is that it ordered the Fed to look at how do we operationalize CBDCs, which is significant. The other thing too is that it doesn't merely delegate to the bank regulatory and the market regulators powers over crypto. There's a lot of other agencies and departments involved, from the State Department to the Commerce Department, all of which will have some sort of a role. I think it highlights the complexity of crypto itself as a regulatory matter, that it doesn't fit neatly within certain statutory powers and regulatory fiefdoms. And that perhaps gets to the larger issue and challenge of U.S. regulation, which it's very fragmented. At the federal level alone, we have 3 federal prudential banking agencies. Then you have 2 market regulators who don't know whether crypto is a commodity or a security. There's that jurisdictional battle. And then one of the things that's not even apparent from the executive order is just the state overlay, right? So there's 50 states that are also thinking about crypto, and you have even mayors, like I'm in New York, our new mayor's, I think, taking his first month of salary in crypto. And it mainly just to highlight kind of the potential for New York to be ahead of crypto. But you have other states that are trying to be innovative in this space, like Florida. New Jersey just came out with a pronouncement a couple days ago. And so there's a real sense of regulatory innovation and in some sense competition amongst the states.
If I could just pick up on one thing, a point you made about classification as a security, that is an absolutely critical thing that needs to be sorted out, in that there's a lot of uncertainty around particular cryptocurrencies, particular tokens, as to whether or not they are securities in different jurisdictions in the world. And that is something that's causing a lot of hesitancy around a lot of potential capital markets activity. That's a very high priority.
And innovation. So you must be, in the sort of portfolios that you're looking at, particularly finding that the basket is containing things where there are quibbles as to whether it's one thing or another.
Precisely. That's right.
That's interesting. So switching tack a bit now, do you think, and this is a question for everyone, do you think there's an advantage to common law regimes over civil law regimes when it comes to the regulation of crypto?
As the non-lawyer,
The user.
Personally, I mean, I'm British, so perhaps I'm biased, but personally, I'm a huge believer in common law and English law, and in my experience of 20 years in the capital markets, having been involved in numerous litigations and complex legal situations, the ability, the flexibility provided by common law to apply some common sense, and also when I have seen judicial decisions made, the ability of non-financial professionals to slice straight through to the commercial heart of the matter has always astonished me. So I'm a huge believer in common law, and I think you only have to look at the volume of capital markets activity and derivatives across the world that are drafted in English law to demonstrate how much competence there is there.
And then on that, the Law Commission has said that now that they're satisfied that most types of crypto, and they've said which, should be treated as property, which is a big point, so you can pass title. And then also they've validated smart contracts for contract law purposes. And then also there's a UK digital arbitration system that you can embed in your code, which will resolve disputes real time, with people making a very quick look into what happened and who should pay what or whatever, which self-executes once they've made that decision as well, which is another innovation.
And Mark, I think we're all
Sure.
probably in agreement
Yeah,
from the US perspective as well.
The US being the beneficiary of the English system, I think we're full on common law here. So.
Now, obviously, recently there's been a bit of discussion in the press about how cryptos have become a way, perhaps, of circumventing sanctions. What do you see? Well, firstly, do you see that as an issue? And secondly, what do you see as a solution to that issue if one is required? That's an open question for Toby. Why don't you start?
My general view is that actually, by definition, most major cryptocurrencies and the permanent record in the blockchain that they create by design means that they are a more difficult platform on which to either to evade sanctions or launder money. And the reality is that a number of very innovative startups like Chainalysis, Asset Reality, so on and so forth, are actually makes leaps and bounds in the asset recovery side of things. I think I've read a number of interesting research pieces over the last few weeks suggesting that actually, the volume of Bitcoin traded in ruble is incredibly low, sort of, very low double-digit millions, and actually, my Coinbase hat on, the internal ability to filter out and shut down suspect transactions using very advanced heuristics is very high, and I think everyone in the industry on that side of things the major players are very aware that there's a huge spotlight on them in terms of AML, and I think they're responding accordingly. So really, you will always be able to find an example and point to that and say, look what people are doing. But I think actually it's a lot more complicated with crypto than it is in conventional means.
Sure.
And the press on them has not been good, has it? So there needs to be a counter story to explain these facts, it seems to me. Because the general sort of tenor of things is that somehow it's a loophole for Russian sanctions.
Yeah.
It's interesting, and I don't know whether there's sort of from a legal perspective anything you think that can be done, Barney and Mark, or is it just do you agree that it's not a problem and therefore there's no sort of legal solution required?
Well, anyone wanting to operate here as an exchange platform needs to be registered for AML purposes.
Yep.
That's a temporary regime. A lot of people have been kicked out of that. Only I think 33, something like that, have got through. There are some extensions to temporarily to the temporary regime, not very many. So a lot of people have been rejected on the basis there, and some high-profile ones on the basis that their systems aren't good enough. So I don't know what more we can do. There's clearly a very careful audit going on from the FCA. Some people are complaining it's too careful, but I think the UK is doing all the right things legally. I don't think we need to change the rules.
Yeah, and I would say on the US side, sanctions compliance and anti-money laundering compliance were certainly a priority for the agencies and enforcement agencies for the last several years. Obviously, the events of recent weeks have made it even more so in terms of headline risk. But I think it's notable that from a licensing perspective, you have states like New York who which obviously has the Bitcoin license. Even from the onset of that licensing regime, a number of the questions relate to sanctions and AML compliance, and that's certainly going to continue as more states roll out various licensing requirements. The other thing too is, I would note that the U.S. Justice Department created a unit recently that looks at the forensic powers that it has to assess whether virtual currency or digital assets are being used to evade U.S. sanctions laws. So there's a tremendous amount of resources that the U.S. government is putting into sanctions compliance. The executive order that I talked about before, a theme of it is anti-money laundering and sanctions compliance, but it doesn't dominate the whole conversation that the Biden administration has put out. And I think that's suggestive of that. It's going to be here. The sanctions and AML compliance are going to be things that the industry is going to have to grapple with long term, and it's not something that's going to necessarily shut down crypto, if you will.
Sure. And now sort of moving on to CBDCs. I mean, we've seen recently some countries launching CBDCs. I think the Bahamas has launched one on a retail basis. I think it's South Africa, Singapore. I mean, it'd be interesting to get each of your thoughts on existing CBDC projects globally. Do you see them succeeding? What do you see the direction of travel being in the context of CBDCs?
I think it's an opportunity to be bold and to really think fundamentally about the role of money in society and the government's interaction with money and what that should be. I'm nervous about. It's an easy thing to say, but I'm nervous about the opportunities for state surveillance that we see in China. I think that it is very easy to view it as a 100% government project, top-down delivery, when actually the technology has always been bottom up. So I think that's a fundamental principle. I think one thing, Canada's project to separate out retail from commercial CBDC, and then to say that you can focus the consumer protection on the retail is very, very interesting, and it's an example of innovation. I also think that it's an opportunity to fundamentally rethink retail banking and what that means for individual people, because at the moment, in a low interest rate environment, retail banking is predominantly about providing security and custody, but obviously when you move to a central bank digital currency, you don't need those things anymore. So therefore, how the clearing bank system works, and whether people all have accounts with the central bank, or whether that's devolved to clearing banks, which is the plan in the UK, but how that all works, I think it's important we don't just recreate the old system with shiny new currency, but it's an opportunity to sort of redraw things.
Sure. And Barney, Mark, I mean, there's sort of been murmurs, well, certainly in the UK, the brick coin. I don't know about in the US, but where do you see sort of CBDCs becoming a thing within the next few years within UK and the US, or do you think it's something where it's sort of much further down the line?
Well, the government in the UK have said latter half of the 2020s if it happens, with a whole sort of conceptualization process that they're kicking off. And they've done a lot of work already. I mean, the first question is, what does it solve that you can't do anyway? Because it's not a normal cryptocurrency, because it's not DLT, is it? It's going to be managed on a register here,
Yeah.
so the government knows what it is. So it's not. It's a slightly different animal. I mean, it's obviously got a huge value because it's a currency managed by a central bank and a government. So unlike a cryptocurrency which has no managing its value, you've got someone professionally managing its value, which is by and large stable, particularly for an advanced economy. So there is a value, but I would hope that the wholesale CBDC is looked at very, very carefully. I mean, over 90% of payments are in the wholesale markets. And if we move to if the efficiencies that people are describing are there, then that would be a big opportunity grabbed, and you'd save a lot of money and you could disintermediate to a large degree. For retail, I agree, it's another prize. What you then need to have a solution for, if we're going to go to the whole hog to a sort of central bank register or central bank run register, is you need to find a different source of lending for the economy, because the commercial banks then won't have the same funding to be able to make the loans for mortgages and everything else. So where's that going to come from? Maybe Coinbase, maybe someone, but there's a whole business of lending that's going to have to exist to allow that to happen.
Yeah, definitely.
And on the U.S. front, the Federal Reserve has been very expressive in the potential for CBDCs, both from a standpoint of financial inclusion, but also its role in facilitating monetary affairs. However, I think an important theme of their speeches and pronouncements, and now most recently President Biden's executive order, is the difficulty of getting it up and running. And Chairman Powell of the Federal Reserve has been pretty vocal on his own concerns with how do you operationalize this within the Federal Reserve System? Do they have the resources and the capacity to do it currently? And one of the reasons why I'm skeptical on whether it's going to happen in the immediate term is because Chairman Powell has stated that, absent explicit congressional authorization, the Fed's going to be somewhat reluctant to be a first mover here. And I think, that's an important point that I actually don't think has been the subject of as much treatment in the press as it should be, because whether Congress is actually going to step in here and explicitly empower the Fed and encourage the Fed to do that, I think is quite unlikely in the near term.
So I think it's perhaps fair to say the benefits outweigh the risks.
Probably. It does need looking at. I mean, I don't know. There is a clear advantage potentially to being a significant first mover. I get that. On a non-China model, where we're not going to check data and monitor and so on. But you need to demonstrate that, because people will be mistrustful of it in the retail market.
I think that's right. There's a real opportunity to embed in the technology those safeties around views of consumer privacy, and people will look to the UK, I think, for guidance. So there's a huge cliche, but there's a huge opportunity as well as economic.
So I think we're running out of time. Appreciate it might be difficult to hear, but I don't know if anyone had any questions that they wanted to put to the panel before we wrap up. Got one over there. I don't know how we'll hear, but we might have to shout. I'll come in. No? That's okay. I'll come right in and get this.
Yesterday, the Chancellor said the UK should be thinking about NFTs. What the F?
I'll repeat that for everyone. So the question was, yesterday the Chancellor said that the UK should be thinking about NFTs. What's the F? So I don't know if there are any thoughts on the
What's the F
yesterday.
or what the F?
What the F? I don't know if there are any thoughts on the announcement yesterday.
It's a step forward. I mean, the Smint thing or whatever it's called, that's just a gimmick, isn't it? But the integrating stable coins is a big step, and they're clearly going to make more announcements as well. He foreshadowed. So I think it's progress. I mean, there's clearly a lot of thinking going on. And as with all law and regulation, less is more. You want to make minor adjustments to what we've got rather than completely throw it up in the air and create some new thing, which is what some of these countries that we've referred to have done, because people aren't going to want to learn up that thing, and it's not necessarily going to work. So I think they're going about it the right way.
If I could also add, I think NFTs because of the digital art aspect of it, have created a lot of mirth. It's easy low-hanging fruit in the media, but the actual underlying technology and the ability to tokenize assets in that way, houses, cars, agricultural land, art, fine wine, and as you move into the metaverse, the point that chap from Near was saying earlier today about tokenized ownership of World Heritage sites which stay in place because they don't need to move because you own the token. Tokenized rainforests. It's a revolutionary technology, and I think it's incredibly important. I know a number of people working on tokenized property ownership, for example, which is hugely interesting. So I think my view is I think it's brilliant that the UK government are trying to be ahead of the curve, and whatever they it gets the ideas pumping around a larger number of people, gets the policy juices flowing. I think it's very good.
Great. Well, thank you all very much for coming. Thank you also to Mark, Barney and Toby for their insightful views. Shearman Sterling, we have a stall just over there if you want to come and talk to us afterwards or come and talk to us up here. But otherwise, thank you very much for coming.